All right, let's dive in. Today, we're going to talk about an investment idea that completely flips the script on a popular crypto narrative. It's all about how to bet on the huge growth of stablecoins, but there's a twist, a big one, and it might just change how you think about this whole space.
So, let me just ask you straight up. Are you bullish on stablecoins? I mean, do you really believe they're going to be a huge part of our digital economy down the road?
Okay, if you just said yes to that, then you're going to want to listen closely. Because the most obvious way to invest based on that belief, well, it's probably the wrong way.
And that leads us right into what you could call the stablecoin paradox. This is the absolute core of why just going out and buying a stablecoin isn't actually an investment in its growth at all.
You know, it really just boils down to one simple thing. Stablecoins are meant to be, well, stable. That's the whole point, right? They're pegged to something like the US dollar. They're a tool, a utility for payments or for trading, not something you buy hoping it'll moon. Their entire job is to not go up in value. So if you're just holding the token, there's just no upside.
And this really spells it out, doesn't it? You've got your appreciating assets like stocks or Bitcoin where the whole goal is growth. You want the price to go up. But then you have a stable coin like USDC and its goal is the total opposite, stay stable. They're just two completely different tools in your financial toolbox.
Okay, so if buying the token is a dead end for growth, then what do? How do you get in on this boom? Well, this is where a classic, super smart investment strategy comes in. It's called the picks and shovels play.
Just think back to the California gold rush for a second. Who really got rich? It wasn't always the miners digging for gold. A lot of the time, it was the folks selling the picks, the shovels, the wheelbarrows, even the blue jeans. That's the strategy. You invest in the essential tools and infrastructure that the entire industry needs to even exist. So let's bring that idea over to stablecoins. The move isn't to buy the gold, the stablecoin token itself, which, remember, doesn't go up in value. No, the smart play is to buy the picks and shovels. And in this case, that means investing in the actual companies building this whole ecosystem. We're talking about their stock, their equity.
Right, so who are these picks and shovels players? Who's actually building all this stuff? Let's get into the specifics and see how this becomes a real actionable strategy. This whole strategy really shines a spotlight on two main companies you can actually invest in. First up, you've got Circle. They're the ones who actually issue USDC, one of the biggest stablecoins on the planet. And then you've got Coinbase, a super important partner that has a direct financial interest in how well Circle does.
And when I say direct interest, I'm not kidding. Coinbase gets about 25% of Circle's profits. Think about that. That's a huge link. It basically means that buying Coinbase stock is a really powerful way to bet on the growth of USDC without ever touching the token.
And, this whole approach fits perfectly with a well-known investment framework. The idea is so simple but so powerful. You use public stocks, public companies, to get exposure to a big, growing tech trend. You're investing in the businesses that are making money from the trend, not just holding the shiny object itself.
But, and this is a really, really big but, this is not a get-rich-quick thing. Not at all. It is absolutely critical to get that this is a long game, a game of patience, and there are very real risks here.
It's almost like a tale of two different timelines. In the short term, oh man, you've got to expect a roller coaster. It's going to be super volatile, bouncing all over the place with every piece of regulation news and every swing in market mood. But the long-term bet, the real thesis here, is on something way bigger, that you're investing in the ground floor of brand new financial infrastructure. And that's where the real power of compounding over years and years comes in.
And look, this short-term risk is not just some theory. To give you a real-world example, at one point, Circle stock was down a massive 60% from its all-time high. 60%. That's a serious drop, and it's a huge reminder that you need some serious conviction to ride out those kinds of storms if you want to see the long-term story play out.
So why on earth would anyone put up with that kind of crazy volatility? Well, it all circles back to the sheer size of the long-term vision. It's about what all this could mean for the entire future of finance.
Here's the big idea, the key takeaway. You're not just betting on some crypto token. The real bet is that stablecoins are becoming a fundamental, core piece of infrastructure for the entire global financial system. We're talking about a whole new set of rails for money to zip around the planet, instantly and for next to nothing.
Okay, let's wrap this all up. If you're a believer in the future of stablecoins, the way to play it for growth is not to just buy and hold the token. It's about owning the picks and shovels, getting equity in the companies that are building the whole system. Yeah, you've got to be prepared for some wild swings in the short term, but the long-term prize, that's a stake in what could be the financial plumbing of the future.
And that leaves us with one last question to chew on. This whole picks and shovels idea is a really powerful way to think about investing. So, as money keeps going digital, what other essential, behind-the-scenes infrastructure plays are hiding out there in plain sight? Something to think about. Thanks for tuning in.